To the economy. Our next guest says the following. The economy is strong under President Trump. We are not headed for recession, and stocks are cheap. Three pretty positive signs there on a Friday morning. Brian Wesbury is the economist, and he joins us now. Okay, first one. The economy is stronger under Trump. Make your case, please.
Well, I have to be careful a little bit there. We've been in what we call a plow horse economy for the last 8 years. And let me explain that. On one side, we have these unbelievably great companies, technology. You know, if you think of fracking, the cloud, smartphones, tablets, apps, all of these new things that we've invented, and they're booming. On the other side, government is just too darn big. When you put those two things together, over the last 8 years, we've had about 2% growth. Right now, under President Trump, we are not adding new regulations. We're rolling back some, and I expect we're going to roll back more. We've put a freeze on federal hiring, and that has helped some of that 2% growth maybe move up to 2.3 or 2.4.
Okay.
In order to get 3 or 4% growth, we have to have tax cuts. We need spending cuts, and I think we need health care reform.
Okay, that's item number one. The Trump economy, this economy looks good under President Trump. Item number two.
Yep.
You don't think a recession is coming. We have heard that mentioned on this program, but you're saying it's not going to happen.
Yeah, I think back over this last 8 years, how many recession forecasts did we hear? In fact, you've had me on many times, Stuart. Why aren't we going to have one? This guy says we are going to have one. And the number one cause of recessions is the Federal Reserve. When they raise rates too much, when they tighten monetary policy too much. But right now, the Fed has $2 trillion of excess reserves in the banking system. And until they get them out, they are not going to be running a tight monetary policy, and therefore I would say the odds of recession are extremely low.
Okay.
The only other thing that could really cause a recession is a big tax hike, and clearly that's not going to happen. We're more likely to have a tax cut.
We hope you're right on that one, Brian. That's a fact. All right, last one. Stocks are cheap. Without getting technical, make your case.
Sure. Yeah, we look at overall corporate profits. We use a capitalized profits model. In other words, a profit is worth less if interest rates are higher. And so if you put that formula together, profits discounted by current interest rates or even a little higher interest rates than we have currently, the stock market looks cheap on an historical basis. And we've been saying this for the past 8 years, Stuart. People haven't believed it. And yet the market is up well over 200%. I still think it has quite a long way to go. I'm looking for 40% gains in the stock market over the next 2 to 3 years.
Whoa, okay. Oh, there. Brian Wesbury, our favorite Friday morning economist. 30 to 40% gains for stocks in the next couple of years. We like that, Mr. Wesbury, and you'll be back. Thanks for joining us, sir. Appreciate it.